All right. As I promised, we're going to work the problems from exam two, and I'll show you how it should have been done. And you then later on, you will have a chance to redo somewhat similar problems to add to your exam two test score. All right. So in the first example, we have Trucco Inc. provided the following partial trial balance in the year. Prepare a multi-step income statement for the year ending December 31. Trucco is subject to a 40% income tax rate. Okay, so in a multi-step income statement, the reason that we do multi-step is so that investors and creditors can more easily determine things like earnings quality and where earnings come from, right? If you look at just the bottom line, the net income, and a lot of people do, but if you look at just the bottom line, you can be fooled as to the stability and sustainability of an organization's income. And so this is why we do the multi-step income statement. All right, so we go over here. So multi-step income statement is always going to start out with a gross profit section, right? So gross profit is going to be the sales, and that's going to be the 225 listed here, right? And then you're going to have the cost of goods sold. And we come down here, cost of goods sold is 90,100. Now, tradition is that we don't put brackets around this cost of goods sold number. We just know that it is a negative number and subtracts from the revenue to get the gross profit. So now we're going to insert gross profit, and that's going to be 135, 300. Now, some people call this gross profit gross margin or profit margin. You might remember from your 2302, the managerial accounting, that we use contribution margin, and that kind of has a similar sound. And so I don't like gross margin. I do like gross profit, but that's just a personal opinion. If you wrote gross margin, I certainly wouldn't subtract any points from something like that. Okay, so now that we have our gross profit section, now we need to get into the operating income section. So what we're going to do that is to subtract the operating expenses. So we just list operating expenses, and there won't be any numbers here on that. And the first one is office supplies expense. And that's $4,500. And go ahead and check these off as you use them. We only use them one time. Office supplies expense. Next one is sales salaries expense. And that is $83.90. Check that. Selling expenses. And that's 11,210. We have accounting legal fees, and it tells us that it's a general expense, so it would go here. That's 2,400. Then we have advertising expense, certainly a operating cost. And that's $6,660. We have office salaries expense. And that's going to be 21,480. Then the depreciation expense. And that's 18,600. Okay, the other expense we have here is interest expense. And for most companies, interest expense is going to be a non-operating expense. The exceptions would be something like a financial institution, a bank where they borrow money and then lend that money out to somebody else, so they have to pay interest. The interest is their operating expense. The interest they pay is the operating expense. All right, so now we add those all up, and that will give us the total operating expense. And if we add those up, it's 73,240. All right, draw a line there. And this gives us our operating income. And if we subtract those out, it comes down to $62,060. Okay, so that's our operating income section. That's where we report our quality earnings, and that's where investors and creditors can expect to see ongoing income. All right, so then we get into the other income and expenses. And notice that we put a bracket around expenses. That's to show this is the only section that will actually put a bracket around the negative part of this. And so we go back up here. We generally start with the revenues first. So we come down here. A note on dividends. Dividends are a statement of owner's equity account. And so we don't include that on the income statement. So then we have the dividend income. And that's 3,830. Okay. Then we have the interest income. $1,450. Whoops, $1,450. Okay. Then we have the gain on the disposal of plant assets. And that is $14,810. Now you may ask yourself legitimately, isn't a plant asset, isn't that something that we use in our operations, and so shouldn't it go into operating income? There is a point there. However, it has been viewed by the powers that be, the procedures making bodies, FASB and the SEC, that the gain or loss on the sale of plant assets is not a normal ongoing thing that you're going to incur each and every year. So it wouldn't be on the qualitative income side. So we put it down here into non-operating income. Okay. Next up is the unrealized gain on trading assets. We'll have a whole chapter on investment coming up later this semester, so it won't be long. And it will talk about trading securities, available for sale for securities, and held to maturity securities. And we'll get into the definitions of those. But trading securities, the unrealized gain or loss goes on the income statement. And so that's 7,270. Okay, so then we have the interest expense. $2,570, and notice we put the brackets around it indicating it's an expense here. Check that off, and then we have the loss on asset impairment. And that's 1840. And again, we put the brackets around it to show it's an expense. All right. And so now we draw a line there. We come up with the total other income net. And so that adds up to $22,950. Okay, so we're going to take the operating income, we're going to add the other total income, and that will give us EBIT, earnings before income taxes, EBIT. Okay, and so that works out to 8510. $85,010. Okay, now we have to calculate the income tax expense. Remember, they had a 40% income tax rate up here. So we need 40% of $85,010, and that works out to $34,004. And again, we don't put brackets on that. We just assume everybody knows that that's an expense, and it will be a negative number. Draw a line there, and we get our net income. And that's going to be 51,006. All right, that's how to prepare an operating or a multi-step income statement. Notice that you have the three sections: the gross profit section, the operating income section, the other income section, and then the income tax expense. So hopefully you'll do better on your next try at this, and you'll understand how it should be put together.